Hello traders, investors, and cryptocurrency fans. Welcome to our channel where we bring you in-depth analysis, breaking news, and reliable projections about the Web3 blockchain universe and digital money trends. Today we will talk about a new analysis that has generated great expectation among traders and analysts in the sector. Bitcoin may be about to skyrocket again, and some technical signs indicate that it could reach $200,000 by 2025. The asset is already above $107,000, consolidating in a range between $107,000 and $109,000, and there are strong indications that this price structure may not last long. In this video, we will explore what are the main technical signs that point to a rise, why this movement resembles previous appreciation cycles, how major market players are positioned, and whether you should consider entering before the next bull run if you want to understand why BTC may be at the beginning of something bigger. Keep watching until the end. Bullish signals are shortly short in Bitcoin. After months of correction and consolidation, Bitcoin seems to be entering a new phase. According to a recent analysis published on X by the Stock Money Lizards profile, which specializes in crypto assets, there are clear signs that BTC is ready to rise strongly in the coming months. The main indicator highlighted is the OTT Optimized Trend Tracker, a tool that combines moving averages with volatility data to identify changes in market sentiment. According to this analysis, the technical pattern displayed by Bitcoin now is very similar to the cycles of 2016 and 2020, when the asset came out of periods of lateralization and soared to new all-time highs. And this could mean that we are close to seeing new highs, perhaps even your $200,000 in 2025. And those who buy now may be in for a nice surprise in the coming months. Why is this pattern important? Bitcoin has been through a correction phase in recent months, but it has maintained its fundamental support base. It has tested the region between $107,000 and $109,000 twice, and instead of falling, has started to rise strongly. This type of behavior is usually an important signal. When the price resists the selling pressure and starts to climb, the market enters a new phase. In addition, the OTT shows that institutional sentiment remains positive. Large funds, family offices, and even companies such as Strategy Inc., Metaplanet, and Trump Media are consistently buying BTC. These movements reinforce the narrative that Bitcoin is not just a speculative asset, but rather a real global reserve. Technical analysis shows real potential. Even with the current price hovering around $108,000, technical analysts see room for a new wave of appreciation well beyond the $120,000 mark. According to the Stock Money Lizard study, a sustainable breakout above $120,000 could pave the way for $200,000 later this year, and if the movement gains momentum, even $250,000 by 2026. This is well above the average of traditional market projections, which are usually around $120,000 for 2025, but it is not unlikely given the history of previous cycles. Experts point out that in 2016 and 2020, Bitcoin also seemed expensive until it exploded with force. Institutional market remains strong. Data from CoinGlass shows that whales continue to buy even with possible short-term corrections. They are patiently accumulating BTC, waiting for the right moment to drive the price. And with spot ETFs approved and operating normally in the United States, the flow of institutional capital is only increasing. Major players are using Bitcoin as a hedge against inflation and currency devaluation. Companies like Strategy Inc., which has accumulated over 500,000 Bitcoins, are leading the charge, but they're not alone. The Trump family-owned Trump Media and Technology Group has also announced plans to add BTC to its balance sheet after raising $2.5 billion in a private round from global investors. And it shows how the narrative of Bitcoin as a corporate reserve is growing rapidly, even outside the traditional tech sector. Once that threshold is crossed, the flow of capital could accelerate, and the next natural target will be $200,000. Where is the buying pressure? One of the biggest sources of demand is from the US institutional market. Pension funds, family offices, and even sports clubs are looking to BTC as a way to protect capital. And with less geopolitical risk and greater regulatory clarity, buying pressure is only set to grow. In addition, on-chain analytics firm Glassnode has noted that the market has entered a phase of price discovery. This means that buyers are appearing more frequently, especially near the $120,000 range, which many see as a new important psychological level. Once this level is breached, capital flows could accelerate, and the next natural target will be $200,000. Even amid a recent consolidation phase, Bitcoin remains the center of attention in the crypto world. The technical fundamentals are strong, institutional interest is clear, and large companies are starting to use the asset as a strategic financial hedge. With OTT pointing to an uptrend and historical patterns repeating themselves, many analysts believe that BTC will easily surpass its previous peaks. And if markets remain stable, with low interest rates and lower risk aversion, this cycle could be even stronger than the last. If you are keeping an eye on opportunities in the crypto market, it is worth following these signals closely. They can give you a perfect window to enter before the next explosion. If this video helped you better understand this phase of the crypto market, like, share, and subscribe to the channel, activating the bell to receive notifications whenever we release content about cryptocurrencies, market analysis, and global trends in the sector. Leave your comment. Do you believe that Bitcoin will really reach $200,000, or would you prefer to stay away until you see more clarity in the macro scenario? Until the next video, and remember to invest wisely. Always learn and protect your assets.